Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Umesh Mehta from Samco Securities, independent market expert Dharmesh Kant, and Vineet Bolinchkar from Ventura Securities joins us on the show. The stocks that we'll discuss on Hot Money today will be Balrampur Chini, Avenue Supermarts, RBL Bank, and Capacite Infra Projects are the stocks that we'll be discussing in today's show. The first stock that we want to speak about today is the sugar sector. Of late, the commodity, that's the sugar commodity, has done extremely well, but the reaction on the stocks have not actually come in. The reason, the big question that we're asking is that while the commodity is rallying, will there be any move that will come in on the stocks? And the stock that we've selected is Balrampur Chini. So I'll start with you, Umesh. What's your view on the sugar space and Balrampur Chini as such, and if there's some other thing that you like in the sector?
Correct. So if you analyze sugar as an entire industry, 88,500 crores is the size of annual sales, assuming that all the stock sugar companies produce gets sold. So in 88,500 crores is a market size, and the sugarcane production, from sugarcane to the actual sugar, 6% is what we get the output. So this is how the industry grows. So current production estimate from ISMA is at around 29 odd million tons. So exact figures, so no one knows, but by September everything will be cleared. So, and the demand estimate is at around 25 to 26 million tons. So there will be a surplus. So now this surplus has to go out of the system, because ultimately demand supply, this is a commodity, and if supply is more, obviously the price will be under pressure. So government is doing in its whatever capacity it is, trying to export and trying to reduce the stock. But the unfortunate
I'll come
part
back to you. Your opening time is up, but I'll come back to you on the point that you're making. Dharmesh, your view on Balrampur Chini and the sugar space?
See, sugar space, I have always been negative. There's nothing to buy into the sugar space. If you look at Balrampur Chini in 2006, it was trading at 205 stock price, and today it is 72. So 11 years, no wealth has been created. It will never create a wealth. Prime reason being, in an industry where top line is function of demand and supply, but your cost is not a function of demand and supply. Your cost remains fixed. So 20%, 15% variation in the top line, you'll end up into a loss. That is what happened with Balrampur Chini. So good harvest, 30 million tons is what is been expected of this year, which definitely it will hit. And then you have 3-4 lakh million ton of excess capacity of sugar, which is lying. How to use that? Worldwide, the sugar capacity is in excess. Secondly, this year again you have a good monsoon. So the MD himself of Balrampur Chini was very skeptical about how they are going to fare this time around. So I don't think sugar is a space at all to be looked into. Trading cyclicals can be there.
Okay, it's a cyclical industry. And what about you, Vineet? What's your view on sugar and Balrampur Chini?
So I'm slightly negative on the sugar cycle. This is the fact that as the productivity goes up of the fields, the cane throughput is going up, or the sugar content is, even if it goes up 1% point, we add significantly to the sugar supply. That is one. Second is, the more you encourage farmers or more you pamper them, they're going to go more into sugar cultivation, because they're getting a fixed MSP for sugarcane, which is known to them. So this kind of pampering is going to lead to additional flood of supply. Till date, we did not have great buffer stocks. Government is creating buffer stocks, which is a great thing. But the next year season with a good monsoon is going to create its problems of its own. So unless we don't up the ante on ethanol production, where the infrastructure is not there, I think we're going to be in for a glut.
Okay, so that's the view that's coming in on the sugar sector. Actually, supply outstripping the demand. And Yogesh, I'll get back. I'm sorry, Umesh, I'll get back to you. You were talking about how there is a big supply-demand mismatch. So I'll let you complete your point.
Correct. So I think sugar is very good way of playing, cyclical. So when there is excess supply, obviously next year the farmers will not be inclined to grow the sugar cane, and therefore there will be deficit, and therefore again the prices will rise. So currently the difficulty is, internationally the prices are at around $12 a bushel, and last year it was at around 24. So obviously last year we have seen a lot of sugar stocks have become 10x from the low prices. So currently, yes, sugar prices, the cycle is down, but opportunity will be created once all the excess sugar stocks gets cleared. So maybe investors will have to wait for 3-4 more months. Don't jump the gun right now. and wait for how the sugar stocks will still will be available at lower level, and those are the times to play cyclicality.
Yeah, so I get your point. So it's more like a cyclical industry, but let's say 3-4 months down the line, when the cycle actually turns, which would be the sugar stocks that investors should watch out, that when the cycle turns, these are the stocks I should bet on.
Correct. So ideally, sugar, portfolio basket of around good stocks with low debt. So Dwarikesh is one of them, Balrampur Chini is one of them, and I think EID is one of them. So these are the three stocks investors has to bet as a basket, because sugar is ultimately and eventually a commodity, right? So this is how, rather than focusing on one, I think they should make a basket of 2-3 stocks.
Okay, Vineet, do you think that over the next few months you might again see a cycle turning on the sugar side? And if someone wants to bet, let's say after 3-4 months, or take a positional bet, which are the best sugar stocks according to you?
So as he mentioned, I think those are the preferred selected
He
stocks.
spoke about Dwarikesh
And
Balrampur and EID. Okay,
Dwarikesh and Dhampur and EID would be my picks.
Okay.
And second thing is, I don't see the cycle turning around that quickly, because we've got a very good monsoon, and that is going to lead to suppressed pricing.
Okay. What about you? You see the sugar cycle turning?
Not in near future. At least for a year, it should not be turning around, because the monsoons are good, and 10-11% is the acreage of yield which will get the sugar extraction. Secondly, see, look at how the demographics of sugar growing states are there. Maharashtra, Karnataka, and then UP. All are very much functional to the elections. So government policies are to support the prices, to have the masses in place. So all these parameters. See, I don't like a business where you cannot control the cost. And you don't know how to, get the blended realization depending on demand and supply. So this business itself is very unviable kind of a business.
Okay. So I would like to add, see, sugar ultimately it is the global market that is going to give, that is guiding the cycle. So currently global market is down since last few years. And maybe, obviously the international farmers also know that if they are not making money, they are not going to grow cane. And when that thing happens, that will be a huge, massive rally. So maybe we will see that in coming years. So around 5 to 6 months down the line, we will see that kind of, if it happens.
Okay.
So I'm not saying that it will, but the chances are that massive rally is going to begin.
Okay. So I think that the consensus view that we're getting from a guest at this point of time, now is not the right time to buy sugar. Wait for the cycle to turn. Probably, as Umesh said, it could take 5, 6, 7 months for the cycle to turn, but not at this point of time. And if that point you want to play, you should play stocks like Dwarikesh Sugar, Dhampur Sugar, Balrampur Chini, and EID Parry. So these are the 4 stocks that you need to keep on your radar when the cycle turns for the sugar pact. The next stock we want to talk about is Avenue Supermarts. The market cap over 1 lakh crore. It's crossed the big companies like Tata Motors and Hindalco and most of the other companies. The market cap has been eclipsed. So the big question we're asking on Avenue Supermarts at this point of time is, will growth continue to overshadow valuations for Avenue Supermart? And that's the question we're asking. Vineet, you go first. What do you like Avenue Supermarts even at 1 lakh crore market cap?
Frankly speaking, I think it's a little tad too expensive. And while money is pouring into the counter, I believe that future retail offers a much better opportunity. They have matched DMart for services, and while DMart is a crowd puller, I think slowly people will realize that future retail is also a great story. We are seeing good growth coming in. The stock is drastically discounted to your Avenue. So I think the stock can give better returns than DMart.
Okay, so that's the view that's coming in. DMart is expensive and future retail is the pick one. What about you, Dharmesh? What's your view on DMart? Do you like at this level also?
See, it has been defying gravity for quite some time. Valuations are always, overshadowing the growth thing. And still, people are, buying largely into Avenue Supermarts. They have been consistently performing over 50%, 60% kind of a growth on top line and bottom line for last 3 years. That consistency has been there with Avenue Supermarts. The model has been very effective. Nobody has been able to replicate the model. Low price and everyday low price kind of a concept which they have done it. So the management, grasp of nitty-gritties of the business is there. So they have been able to procure and deliver goods to the consumers at a low price. So the business will continue to there. My only concern is valuation, and someday this should catch up. This should even out. So that's why I don't think one should be buying here.
Okay, so that's the view. Again, valuation concerns still remain. And would you also, Umesh, at this point of time, believe that valuations, will be a spoil sport in DMart going ahead?
So I think laws of economics, demand and supply, I think that is clearly playing out in DMart. So where there is clearly demand and supply is not coming. So down the line, yes, 4 or 5% supply will come. But market is really seeing why this huge amount of valuation is because of sustainability and visibility of earnings, and that is what market is betting upon. So if this question is asked to Warren Buffett that will you buy DMart at this valuation, the answer would be no, because it's trading at huge valuation. Even he bought Coca-Cola when it was available at 12 PE multiple, when the prices had corrected from 30-35 PE multiple back in 1987-88. So eventually, yes, the stock is great, business is great, but valuations are high. But still, from trading point of view, those who are momentum investors and they want to ride the wave, stock will deliver. Obviously, risks are there, but stock will go inch higher and higher. Because there is a lot of demand and supply is not coming.
Okay, so that's the view that's coming in on Avenue Supermarts. I think valuation concern is there. You said supply is not coming, but ultimately it will have to, because the promoters will need to. Because when we saw that the promoters sold in 1 or 2% stake, the counter did manage to correct significantly. So is that a risk that an investor will always have to keep in mind for Avenue Supermarts?
Correct. So that is risk is there, but. So off the record, but maybe something is happening. Promoters are themselves trying to take the stock price indirectly higher and higher because they want to eventually offload. So this 2-3 years will be fastest, in terms of growth, in terms of what they have to deliver, because eventually they have to sell. But I think once the selling is over, that's the time the stock will have a lot of supply, and from then onwards, demand will not be there.
Okay, Dharmesh, it doesn't work around a moat as such, because they are selling products which are available. How big of an impact will online have? Because if you're surfing the web, Amazon has a big Amazon pantry. That's a big venture that they're looking at. So is that not a big concern for someone who's looking? Because ultimately, Amazon will not offer probably the price, but it'll offer you that convenience.
I don't think so, because see, in India, consumers are very price sensitive, and the type of class which Avenue Supermarts is catering to, they are highly price sensitive, and they have been managed to get the products in their basket 10 to 12% cheaper than what others are offering, and that is because of the logistics and the type of business implementation which they have done. So they have provided, they give you cash first before the delivery of the products come to their warehouses. So that working capital set on the part of the manufacturer. So that interest cost has been passed on as a discount to Avenue Supermarts, which they are, again passing on to the consumer. So this business model is very, robust. I don't think Amazon would be able to do that. If they do that, then obviously it would be a competition.
E-commerce is still around 8 to 10%. So 90% in sales in India are happening at brick and mortar level. So they have got huge.
So even they can go to e-commerce.
Okay.
But my point is, business-wise, nothing wrong.
Okay.
Only valuation mismatch is there. So this will correct over a period of time.
Okay, so we need to move on to the next stock now. The next stock that I think the consensus view is valuations are expensive for Avenue Supermarts. So Vineet spoke about that he prefers a future retail to DMart at this point of time, but valuation concerns remain with the other two guests. The next stock we want to talk about is RBL Bank. Had corrected significantly, but it's up almost 20% from the March lows. The momentum clearly in favor of the RBL Bank. Will the rally continue in the counter? That's what we are asking. Dharmesh, what's your view on RBL Bank? Do you like the counter?
Yeah, very bullish on RBL Bank. They have been able to do their business very well. The penetration level has been high. Every month they have been adding to customers. The best point of RBL Bank, if you look at, they were managed to have the NIMs higher on Q&Q basis for Q4. And this was primarily because their cost of funds are low. If you look at the balance sheet, the advances which they give is less than the deposits they are having in the form of savings account, current account. So that's the catch out there. It's not borrowing dependent, it's more of a deposit dependent. So the business model has been, they have perfected it. SME is the segment where the corporate lending, they are doing that, and that's flourishing in India as of now. So I don't see any deceleration given the economic situation we are into right now. In RBL Bank's top line and bottom line growth, 30-35% they will manage, 30% book value growth will be there. So 30% kind of an upside based on 1 year forward valuation multiple, I do expect in RBL Bank.
Okay, so positive view coming in on RBL, and Umesh, your view on RBL Bank?
Yeah, I agree with Dharmesh. I think there is one bank in private sector space having recently gone into, and they are really they are doing really good. Just by 265 branches, they have been able to penetrate. Given the digital footprint and net banking, they are also catering heavily. But given that 35-40% growth, with every year they are increasing their ROEs, so they are becoming efficient and efficient. I think so that is a positive sign, and this is how even HDFC Bank 15 years ago, 20 years ago also grew, and that is how even they. So we see a lot of similarity between the way RBL has adopted its model and the way it is growing. But the better part is that the branches are less, so they are growing, but with lesser and lesser amount of branches. So I think that's good, and that is what the future is all about. So ratios are all efficient, and 0.78 is their net NPA. So I think that is also under control, and it is comparable with private sector other banks.
Okay, so two positive views, and would you agree with RBL Bank?
I think it's my top pick in the sector. Always has been. I think the management is very strong. They have a good breakup of loans to corporate sector as well as retail segment. So, in case of wholesale banking takes off, they are well placed because they have almost 20% of the top 100 corporates who draw loans from them. They have got a very high exposure to non-secured lending, which is about 32% of their portfolio. And that speaks volumes of their ability to micromanage the retail side also. So this is the reasons why they have a high NIM. You're seeing ROAs also move up, and they will be the next bank which will get into the mode of financial services. So given that, I think this is my top pick. It's 36-37% growth is I think is much doable because we are an underbanked country, and with the PSU banks coming off, I think that field is open and these guys will get the best.
Okay, so I think it's a triple thumbs up that's coming in on RBL Bank. I'll start with you only, Vineet. What about valuation wise? How does it stack against the other established brands like an HDFC Bank or a Kotak should on that value?
So it's sub 2 on FY21. So if you have a 3-year view, and if the momentum continues, this bank could go to 3.5, 3.6 times book. So the return that you will get in this bank compared to the rest of the pack of the larger banks, private banks, I think will be disproportionate.
Okay, what's the USP that you said it's your topic? What's the USP of this bank? That will give an alpha over the PSU banks or the larger private.
See, when they started off, they had a very frugal beginning, but the management has carved out its niches, banks to its strength, and its strategies based around low ticket, high volume transactions. So that is what they've mastered. Then the Vishwaveer Ahuja and gang who have come into the bank, they have a good corporate banking experience at Bank of America. They're some of the highest pedigree managements that you can get. So you're marrying a good strategy with a very committed management team. And you kept your cost under control, you've kept your NPS under control, and you're all mimicking a typical growth of a private bank. In the early stages you grow at 30-40% and then the growth tapers off. But I don't see growth tapering off primarily because of our, we are seeing the RB, the credit growth pick up. We have seen because of PCA, these other banks getting sucked out of the system. So I think the pie is increasing. And because of these things, I think this is one universal bank which will outperform the others in terms of returns.
Okay, do you agree in terms of it's his top pick, but among the private sector banks, Dharmesh, what do you like? Would RBL feature among your top picks?
Yeah, definitely because of the valuation comfort which RBL Bank has as of now compared to the larger peers like Kotak Bank or HDFC and IndusInd. So there the valuation has actually shot up compared to RBL Bank, and the growth opportunity which RBL Bank will have going forward. Because it's a small bank, 40,000 odd crores is of advances as of now. So till the time they hit 1 lakh crores or 1,25,000 crores of advances, till that time this high growth trajectory will be there. Then it will become difficult for it, because then they have to get into a borrowing segment to cater to the advances growth. So there the cost of funds will start rising. So sufficient elbow room is there as of now. And I think if you look at it very closely, it's similar to what Yes Bank did 10 years back. MSME segment, slight retail, and then you pull it through. So this is what they have been doing in the areas that touch the areas which was not touched by the larger peers. So that strategy has played off well.
Okay, I think it's a triple thumbs up, and we need to move to the final stock because we're running out of time. Capacite Infra is the last stock that we want to talk about. It's down almost 30% from the recent highs. Has the stock bottomed out? Is it a good time to start accumulating? That's the question we'll ask. Umesh, I'll start with you. I think a lot of hype created around the IPO. It did well post the IPO, but suddenly there seems to be a little bit of concern. The counter has corrected. Is this the right time to start accumulating?
Correct. So why the counter has started correction? I think let's start from that. So post IPO there was hype and valuations were higher, and they said we are only into niche segment. We do contracting work for large builders, and real estate is their forte. And 87% of their book is on the western side of, and where the market is growing. So all those things were great, and I think that's a great way of doing it. So rather than being into real estate, full-fledged real estate, they are into a segment which is, you construct their properties and then you take your fees, you take your money, and you are out. So whoever builder, you have a proper contracting system, and you got the contracts. But the concern is they have raised their debtors turnover ratio from 105 to 140 days, so 150 days. So that's the concern. The concern is that they have increased their working capital turnover cycle from 65 days to 90 days. So when you see the best classes, best practices that you have seen in the industry, the debtor turnover ratio is only 45.
I'll come back to you on this. And what about you? Do you have a view on Capacite?
No, I don't track it actively.
Okay, and what about you, Vineet? What's your view on Capacite?
We are bullish on the counter, but their first quarter results, previous quarter results are very disconcerting. So what they stated and what was reported, there's a lot of mismatch between body language and performance. So they said that GST renegotiation of networks of contracts was the reason why they had not booked revenues. But and the second thing what is happening is that because of this Ind AS 115, where you have to go from project part completion, percentage completion to project completion method, there the builders will have to take a lot of hit. They'll have to pay MAT, they will have to classify these guys as lenders, you're the guys who take flats, and that is going to kind of create a problem for builders. So I think the next 1 or 2 quarters might be a little bit of a problem in terms of working capital, but they have a very strong order book. They have 4.4x on FY18.
Okay, so strong order book. I'll come to you, Umesh. You were talking about how did this happen? You were talking about the debtor days increasing, the working capital. What was the reason, and what's the management outlook on that?
Correct. So the real estate actually, while selling, because of the ticket size of properties, and the real estate the companies are finding it difficult to sell. So obviously when they are not able to sell, they are going to keep back the money for contractors that they will pay later. So that is where I think is a problem. So 150 days of cycle of debtors turnover cycle, I think that's huge, given that if they have bargaining power as a contractor, I think they should be able to reduce it rather than increase it. So I think that's the weak point, and working capital cycle also has increased. So these are the two things are of serious concern, given growth is there and valuation is also reasonable to an extent 25, but I think we think below 20 is the real valuation, wherein there is a lot of safety or margin of safety, but currently the valuations are slightly higher. Growth is there, but the 5,000 crores order book, I think so that visibility is there. So given that all those things, company will deliver, but as an investor they should accumulate at lower level.
What did the management say post the fourth quarter numbers?
So I think
what's the outlook that they have given?
The clarity was not there, to tell you that answer one, that look, this is what we did and this is how it, so that did not come out. So in a way market is guessing that what could be the reason why there is an increase, and what are the reasons. So yes, that is how market is pricing in, and not really taking the stock higher and waiting and watching, what the next quarter results will be, and what will be the response of the management in doing their business.
Were you convinced with what the management said post the numbers? Do you think that over the next 2 quarters, you said that 2 quarters probably will be, do you think that they will be able to turn it around?
So we'll watch this quarter, what happens, because it's very difficult to say that because of GST we had to renegotiate works, and because of that what billing was revenue booking was postponed. Okay, this they could have come out earlier and warned the markets. They've not done ethical things. So I believe that they need to pull up their socks, concentrate on the business, and demonstrate that this is a one-off event and that we will go back to those 65 days of.
But you think
working
it's
capital.
possible, given the fact that offtake is clearly not happening on the real estate side, because whatever brokers you speak to, you have your JLLMs and Knight Frank, their reports do indicate that offtake is clearly not happening.
So I believe that getting money is not an issue. What they need to do is they need to demonstrate that this is a one-off.
Okay.
So that is my.
Darshan is right when he's saying if real estate is not selling. So if a subcontractor, how can he make money if the
that's-
main guy who is selling the flats is not able to make money? So somewhere down the line you will get stuck. The entire payment cycle, and that is what has been reflected in the when he says days are increasing.
Yeah, so was the management able to put the word across that things will be better?
let's understand how the business is structured. 40% is coming from the top builders of Mumbai, okay, who are supposedly financially sound, right?
But
So
their projects are
the risk of payments not coming through is significantly lowered, right? So given that, I would give them a little bit of elbow room that over the next 1 or maybe 2 quarters, you come back and you tell us that things are back to normal as you had prescribed. So they also do have a little bit of cash flow on the books, okay, from the monies raised from the IPO, and they're supposed to have very strong margins, because if you go into ultra high skyscrapers, the margins are up of 22% when they've reported around 14.5. So there is that room that this money which is stuck up, if it comes through, you will see the margins come back and cash flows easing out.
Okay. So I think that's the view that's coming in on Capacite Infra. I think I think the consensus view is that wait and watch. A fourth quarter was probably an aberration. The next 2 quarters we need to watch out. If the valuations come down slightly or the management managed to deliver what they've said, then it's the time to start looking at Capacite Infra. But with that, it's a wrap on today's Hot Money. Vineet, Dharmesh and Umesh, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.